Hello and welcome to this conversation on Bloomberg Quint. It was on Saturday that the IDFC and Shriram Groups announced a merger at a press conference in Mumbai. The contours of that merger are now well known, but there is still a lingering doubt as to whether this makes sense for the Shriram Group. Neeraj and I are very pleased to be joined by Mr. R. Tyagarajan, the founder of the Shriram Group, the person who's actually built this group up, so nobody better to understand the rationale behind this merger than him. Mr. Tyagarajan, very kind of you, sir, to take the time to speak to us again. Appreciate it. Sir, I guess, the first question is, I know that the swap ratios, etc., still have to be determined, so a final assessment can only be made after that. But people who have followed your group are asking the question as to why it makes sense for the Shriram Group from a business perspective to fold into a relatively new entrant into retail banking, which is IDFC. We're not getting that rationale, sir.
You see, we are focusing on providing services to our customers. That has been our objective, that has been our approach to business. It is not creating a big enterprise or a very profitable enterprise, but the one which provides better and better and more varied services to our customers has always been our focus. That's how we diversified from our original business of chit funds into lending to commercial vehicles, thereafter lending to individuals, supporting SMEs, the excluded part of the community, extending loan services to them. All these things we have been doing, keeping the objective that we should provide more and more valuable services to our customers. That's the reason why we entered insurance as well. Having entered insurance, we now feel that our customers, primarily our truck operating customers, have been enormously benefited for our having entered the business of insurance, to which we were new. Today, our truck operator gets an insurance claim for the damage to his vehicle in about 40 days from the date of accident. He used to get it at the end of about 1.5 years before we got into general insurance business. So we are getting a stream of good income for Shriram Transport Finance Company for organizing insurance service to our customer, and at the same time the customer is getting a much better deal than what he was getting earlier. So this is a sort of a win-win situation both for Shriram Transport Finance Company as well as for his customer. Similarly, we believe if we extend the range of services that we provide for our customers, then they will be benefited. And incidentally, the company which is providing the benefit to them also will be benefited. So banking instruments, the banking service is something which we would be happy to provide to our customers, and that will be doing good for them as well. So we are extending the range of our customers, and also the range of the products that we have been giving. So with banking products also coming into our fold, we will be able to offer the whole range of financial services to our customers. We believe that will benefit them. Because it is going to benefit them, we believe that we will also be able to earn some more money for our shareholders.
Hypothetically, sir, then IDFC should be merging into you. I know the banking license there becomes an issue, but you're much larger. You're the one who has the products. You're the one who has the customers.
And the reach.
See, I believe that when a merger takes place, which one is merging with another is not important. I don't think you can even separate it like that. It's a merger, that's all. Two entities come together, and we believe that by making the entities come together and working in an intelligent and socially committed way, we will be creating synergy. In fact, the Shriram Group has been a specialist in creating synergies. We started a very small business like chit fund business. We used the chit fund business in order to create our truck financing business. We used both of them in order to create our general insurance business. Without any one of our businesses, I'm sure the other businesses would not have done so well. So what we have done all these years is to create synergies between different groups of people engaged in different businesses, in different enterprises, and we have been quite successful in creating it. I suppose we will do the same thing here. So it is not important as to who is going to merge with whom. There is a merger between two entities, that's all. Each entity has got its own activities, its own components underneath it, and therefore we will find a way of putting all of them together as a merger in which what our primary aim will be to create synergies.
I'm sure somebody with your experience will do that very well, sir. So no questions on the business front, I mean, or maybe more questions on the business front, but I'm bringing in the shareholder perspective out here, sir. Is the thought process that a merged entity, purely from a shareholder wealth creation perspective, will do much better than what you've done traditionally, which is focus standalone business, which generate great returns, great flows, and therefore great return ratios, because your return ratios are much superior to IDFC. By merging these together, isn't there a bit of a confusion from a minority shareholder's perspective that I'm owner of a business which traditionally earned 3.5%, now I'm getting merged into an entity which is far lesser on the return ratios?
No, when we complete the details of the merger, it will emerge that the shareholder of every one of our businesses will be benefited significantly because of the merger. The benefits that the shareholder will be getting will be more under the merger scheme than the pre-merger scheme. For example, if you look at Shriram Transport Finance Company merging, which is one of the things that we are proposing, merging with IDFC Limited, you will find that Shriram Transport Finance Company will retain its identity when it comes to truck financing business, and therefore all the profits that it is making in that business will also be available for the merged entity. But then it will also be benefiting by IDFC owning the insurance companies, significant investments in the insurance companies, and the fact that STFC's customers will be able to reach out to the banking products through us will create again additional stream of income for STFC. So I believe the shareholders of the STFC will benefit significantly because of the merger with IDFC Limited. And that will be the case even with regard to the merger between Shriram City Union Finance and IDFC Bank. We will have to ensure that whatever we do, eventually it has to benefit the shareholders. It can't be otherwise. And we can't get their approval if it is going to affect their interest in any way. So we are conscious of the fact. And as we see the scenario, there is a tremendous potential for increasing shareholder value because of this merger. That's why we are thinking of a merger as well.
Which is perfectly fine, sir, and your point is well taken. I just have a small doubt, and it's a pickle that maybe you can clear. You know, I was looking at some notes that have come out based on the current prices and the ratios that both, since you cited IDFC Bank and Shriram City Union, an ideal swap right now comes out to about 40 shares or 38 shares of IDFC Bank for every share of Shriram City. If that were to be the case, back of the hand calculation shows that Ajay Piramal's stake would essentially go up above 5%. If it has to be kept to the threshold of 5%, the swap can't be 1:38, 1:40. How do you solve this?
You see, we will entrust it to our colleagues. Dr. Rajiv Lal will look after that. He understands what are the requirements of the regulator when it comes to a merger between these two entities. He also understands that the shareholders of Shriram City Union Finance should not be worse off because of the merger. All these factors will be taken into account in determining this swap ratio as well as the way the businesses should be done in the future. I think that will be taken care of by people who are thinking on the same lines. The points that have been raised are being taken note of by Dr. Rajiv Lal and his colleagues, and as well as our people, and we will work out something which is to the benefit of all concerned. Otherwise, it will not move forward.
Mr. Tyagarajan, what is the view of the employee trust? I mean, apart from the fact that, you always empowered the employees, they hold the bulk of the shareholding. What is the discussion between you and the trust? Are they, I'm assuming they're on board, but what is their thought process? What are they thinking about this merger, sir?
See, all these years, they are aware of the fact that we are working in their interest. And the level of conviction that we will always be doing things which will be enhancing their prosperity, the view will be prevailing, it will continue to prevail among the members of the ownership trust. And the preliminary discussions we had with some of them shows that they are quite happy and enthusiastic about this.
So they haven't raised any concerns? They are on board with the merger?
The key people, yes, and therefore the rest of them also will follow. And they know that we will take care of them, the way we have taken care of them all these years. And if it's good for us, it will be good for those people as well.
I'm sure. Would that be the view of some of the large investors as well, sir? And a question that, sorry.
So far, see, one thing is we have not finalized the details of the merger.
Sure.
The rough outline that we have been discussing with our major partners like Sanlam of South Africa, Ajay Peramal, and your TPG, so far everybody is enthusiastic. They think it's good. We haven't had anything negative from any one of the people with whom we have been associated, including our own employees. Nothing negative so far. The level of enthusiasm is high or medium, that's about all.
Sir, just one question. There was one issue on the business side that people were wondering. The businesses, the financing businesses, City Union Finance and Transport Finance are stable. There are no issues in terms of non-performing assets which may have spiked after demonetization or something. There's nothing there which would prompt you to consider a merger because you want to let that standalone issue emerge as a large issue for these two entities.
No, due to bad audio, I couldn't hear you fully. Can you repeat your question?
No,
again?
my question, sir, was just that the two financing businesses, are they in good health? City Union Finance and Transport Finance. There was some concern about NPA spiking up post demonetization. You have to move from 120 days to 90 days, right? So if you go to a bank.
You see, the businesses are in very sound financial condition. The moving towards 120 days or 90 days have been anticipated before. So we are equipping ourselves for that. It's not going to make much of a difference. There will be some temporary problems for a quarter or two, but then it gets adjusted over a period of time. That's not a very serious issue. Though I would say it's not appropriate for this business of commercial vehicle financing to abridge that period or even reduce that period. It is not appropriate. It is not good for our customers. But the regulator having decided that it should be like that, we are going ahead with it. It's not going to affect the health of the business in any way. Same is the case with the Shriram City Union Finance's business also.
Assuming that all of this goes through smoothly with the regulator, sir, and if you take this to vote to the shareholders, because I did read about you saying this, that you will take it only once all the final approvals are in place. When it eventually goes to shareholder vote, would it essentially be determined by the minority and the investor shareholder vote, or would the promoters also take part in the voting?
See, one thing is clear. If the whole project is quite attractive from the shareholders' point of view, the minority shareholders, the promoters, the majority shareholders, the investors, your private equity, all of them will feel happy about the whole thing.
Sure.
So the basic structure has to be beneficial, which is what we will ensure. The way it looks to us at this point of time, it is going to be very, very beneficial to the shareholders. Therefore, we don't anticipate that we will have any problems in convincing the minority shareholders as well as the bigger shareholders.
Okay. No, I'm sure if you've thought through this, then you probably have that on board as well. But if it comes to a vote, sir, would the promoters vote or would the promoters abstain from voting?
I have not applied my mind to that situation because I think it is going to be very pleasant for everybody. So there will be no issues. There will be no voting, counting and all those things may not be there.
Okay. Fair call. I think this answers most of the queries that at least me and Ira at Bloomberg Quint have. Thank you so much once again for your time, sir. Really appreciate you doing this.
Okay. Thank you. Bye.
That's Bloomberg Quint in conversation with R. Tyagarajan, the founder of the Shriram Group, trying to get some answers.
Yeah, what do you think of it?
Well, I think he has a very clear logic. It'll all come down to those corporations.
Yes.
I think we are all partly in the dark, right?
Right now, yes.
Yes. So it'll all come down.
But
your thoughts?
I know. The only takeaway that I would take out of this is because, as you said, it's a lot of grey areas right now. But he seemed completely confident that shareholders, minority or otherwise, will not have any problems with this.
Yeah.
So let's take the man's confidence into account.
Absolutely. Thanks for watching. We will convert this and you can see it on the BloombergQuint.com website as well. Do log in case you missed this conversation.